All right, welcome back to another edition. So today we are going to start talking about, so we're still in chapter 2, we're going to start talking about minimum wage, kind of what's included in our calculation of minimum wage, and we'll go through some kind of simple calculations of minimum wage. We're going to get a little bit more complex on Thursday with some of these problems. We're also going to talk about tipped employees and how tipped employees are paid, what their rate of pay is. Then we're going to move on to overtime and how we calculate overtime. And what we're doing today is just kind of higher level overview type of discussion of these topics. We'll get into a lot more specific calculations. I'll do some calculations today, but we'll get into some deeper calculations of these on Thursday. And then we're going to talk about, hopefully we'll have time for this. I didn't have time in the last class. Talk about the difference between exempt and non-exempt employees. And when we talk about exempt and non-exempt, we're talking about exempt from provisions of the FLSA or not exempt from provisions of the FLSA. So we've got two different PowerPoints that I'm using here, and you have access to both of these. One of them is from the chapter, from the publisher. But there's another PowerPoint that I kind of like to use. I like to dip into it. There are certain slides that they go a little bit more in depth. This is from the Department of Labor and is a PowerPoint that covers those four main provisions of the FLSA. So minimum wage, overtime, child labor, and then the record keeping requirements. So this goes into a lot more detail. It's pretty long, 77-page PowerPoint, but I kind of slide between the two there. Let me get the attendance here. Daniel? Yeah. I'm sorry. Colton. Sorry. I'm still learning. All right. So let's get started here. So what exactly is minimum wage? So most of us know minimum wage as the minimum amount that an individual has to be paid on an hourly basis per the law. At the federal level, we have a minimum wage of $7.25 an hour. It's been that way since 2009 is when that was passed. It has not been increased since then. That's because it takes Congress and the president working together to increase that minimum wage. And it's difficult to get them to agree on pretty much anything. So minimum wage is no different. So it has been that way for 16 years. It does get increased. When I was, my first job my first job ever was working at McDonald's. When I was 16 years old, I remember going up there on my 16th birthday and applying, and the rate of pay was $2.15 an hour, and I was so excited to be getting paid. So it has increased, obviously, over the years, but it's still not really kept pace with inflation. And for somebody who's only making an hourly rate of pay, it's pretty easy to do this calculation, right? So we just got $7.25 an hour times whatever number of hours were worked. And then that gets us our gross wage. However, sometimes people are paid amounts in addition to hourly wages, and at times those additional amounts are included in our calculation of what our hourly wage is, and sometimes they aren't. So things like commissions would be, we think of sales commissions. So you get a certain amount of pay in addition to your regular pay if you make certain amount of sales, certain level of sales. So let's just say you made $1,000 in sales, during the week, and you're entitled to a 10% sales commission. So in that case, commissions, that $100 additional, gets to be included in our calculation of what our hourly rate is. So if we have somebody who's making, let's say on a weekly basis, they made $150 per week. They worked 40 hours in that week, but they made some commissions. So this was their wage, but they made some commissions of $140. If we had a 10% commission, they sold $1,400 worth of whatever it is that they sell. So together, their total wage for the week, transposing, is $290 for the week. We get to include that $140 in commissions in our calculation of determining if they met the minimum wage requirement. Now, if we take $290 and we divide it by the number of hours that they worked, 40 hours worked, what we come up with is $7.25 an hour. They've met the minimum wage requirement, meaning the employer pays them $150 directly as a wage, but then they earned that additional commission of $140. We get to include that. If we didn't get to include it, we would take $150 a week, divide that by the number of hours worked, the 40 hours worked. They wouldn't come anywhere near the minimum wage requirement, right? But the employer gets to include that $140 of commission in the calculation to make sure that they are meeting the minimum wage requirements. Another type of additional pay are earned bonuses. So earned bonuses, as opposed to, and we call them non-discretionary bonuses, as opposed to discretionary bonuses. The difference between those two, with an earned bonus or a non-discretionary bonus, the employee knows what they need to do in order to earn it. So if you get a bonus, maybe if you sell, once you reach $15,000 of sales during the year, you're going to get an additional $150 bonus. You know what you need to do. You have to make $15,000 worth of sales in order to get that $150. It's predetermined what you need to do. That type of bonus, that earned bonus, where the employee knows what they have to do, that also gets to be included in our calculation for minimum wage purposes to determine whether minimum wage has been met or not. A discretionary bonus is one that the employee really doesn't have control over. It's one like, for example, end of the year bonus. If the business meets a certain goal, then the owners decide that they're going to give a bonus to everybody, to every employee. Well, the employee doesn't have any control over that bonus. They may get it, they may not get it. They don't know what they exactly have to do personally in order to receive it. In that case, for those discretionary bonuses, they are not included in the calculation of minimum wage. If this were a discretionary bonus, then we would have to take the $150 divided by 40 hours to get the hourly rate. Let's just do that calculation while we're here. I don't know why I can't do that in my head, but so $3.75 an hour. Obviously, that's not meeting the minimum wage requirements. The employer is going to have to pay more than the $150. They're going to have to increase that amount. For example, if we had somebody who that was their salary, but they also work on a commission basis, it's those two items combined that can determine whether or not that $7.25 an hour has been met. Okay? So that can be included again. So earned bonuses are included. Discretionary bonuses would not be included in that. Severance pay, so if you're terminated from your job and you're given a few $100 to go away, or whatever the severance pay is, that gets to be included to make sure that the employer has met the minimum wage requirements. On-call pay, so that's when if you're in a job where, the medical field is a common field where there's on-call pay. You get a certain rate when you're on call. It means you would have to come in if they call you in, but you can go out and do other things. You just have to stay in the general area. The pay that you receive for that is also included in our calculation to make sure we've made minimum wage. Shift or weekend differentials. So when an employer or when an employee works maybe the third shift, like an overnight shift, they might get an additional amount of pay for that shift. Or if they work on a weekend, they may get an additional amount as well. That also is included in our calculation of minimum wage. So this is all to determine whether or not, once we take the total amount of wage that was earned during the week, divide it by the number of hours that were worked, did we meet that minimum wage requirement of $7.25 an hour? Some other types of compensation that is not included in our regular rate of pay. So any gifts made as a reward for service. So congratulations, you've been here 5 years. Here's a candied ham or something like that. Any payments from a profit sharing plan. So if your company shares in the profits with the employees, so like I know Hy-Vee is known for doing that, having a profit sharing plan, that's not included as well in our calculation of minimum wage. Vacation, holiday, sick day pay, jury duty pay. So these are hours that you're paid for, but you're not. Did somebody knock? Oh, I'm hearing things. So these are hours that you're paid for, but you're not actually working. That's not used in the calculation of whether or not minimum wage has been met or has been violated. Let's see. If you're guaranteed a minimum number of hours to be paid that are more than the actual number of hours worked, so we pay you for 40 hours, but you only worked 35, but we always pay you for 40 hours. It's sort of a salaried type of position. That's not included as well in the calculation of whether minimum wage has been met. Vehicle, tool, uniform allowances. So this is where if you've been reimbursed for any of these items, that is also not included. Callback pay that's infrequent and sporadic. That's kind of like that on-call pay. Longevity bonuses, sign-on bonuses, that sort of thing is not included because that's not hours that are actually worked, right? Those are, you're getting paid for them by the employer, but they're kind of bonus type of payments. Also, cost of providing certain non-cash benefits like parking and access to a gym and that sort of thing. So the value of those items are not included then in the determination of whether or not minimum wage requirements have been met. Now, there are certain instances when the employer can pay less than the minimum wage, less than that $7.25 an hour. There's a training wage. So if you are under the age of 20 and you are in your first 90 days of employment and you're in a training period, they can pay you $4.25 an hour rather than the $7.25 an hour. If you're over 20 though, or if you're 20 or above, or you're outside of that 90-day window, then employers have to pay at least the minimum wage, the $7.25 an hour. Colleges and universities, if they employ full-time students, and they have to be full-time students, they can pay them at 85% of the minimum wage. They don't have to pay them the $7.25 an hour. Also, retail and service establishments and farms, again, the employee has to be a full-time student in order to have the benefit. And there are some other, I'm not going to go through it, but there's some other lists of instances when you can get paid less than the full minimum wage. If I remember right, like places like Goodwill that employ individuals with intellectual disabilities, they can pay a lower rate to those individuals. They do have to get approval for that in order to do so. Now, there are a lot of situations. So there are a few situations where employees can be paid less than the minimum wage, but there are a lot of situations where they actually have to be paid more than the minimum wage. Employees of federal contractors. So a federal contractor is a company or individual that provides services to the federal government, but they're not an employee of the federal government. And there are a lot of federal contractors out there. They have to pay at least $17.20 an hour to their employees if they're federal contractors. Also, and we'll get a little bit more into this when we talk about tips, contractors do not, if they're a tipped employee, the minimum wage is still $17.20 an hour. They don't get the tip credit. We're going to talk a little bit more about what that tip credit is here in just a little bit. But a lot of the food service people that work at the federal government, so the different departments have like cafeterias and places like that provide food to the federal employees. The people who provide the food service oftentimes are federal contractors. They don't actually work for the federal government. They work for a company that contracts with the federal government. So those individuals would be considered federal contractors. They'd have to be paid at least $17.20 an hour, whether they're a tipped employee or not. Also, there are a lot of states that have a higher minimum wage. And let me pull up, I had pulled up here we go. So this is a list of all the states and what their current minimum wage is. You can see there are several that have minimum wage set at a higher rate. Now the employer has to pay whichever rate is higher. Did somebody just knock? Yeah. Okay.
Hello.
Hi.
Hi guys. I'm sorry, everybody.
So the employer has to pay whichever rate is higher, the federal minimum wage or the state minimum wage. And you can see, in fact, I think most states now, I don't know exactly what the number is, I could go through and count, but I'm not going to waste time doing that, have minimum wage that is higher than the federal minimum wage. They got tired of waiting for the federal government to make any changes, and so they have made changes themselves. So some of them you can see: Arizona, $14.35 an hour. California, $16 an hour. Surprisingly, California is not the highest minimum wage. You can see District of Columbia, so DC, Washington, D.C., $17 an hour. Hawaii, $14 an hour. Maryland, Massachusetts. Iowa is $7.25 an hour. That is the minimum wage in Iowa. And you can see there are a lot of states here that do have the same minimum wage. Those states either have their minimum wage by law set as equal to the federal minimum wage, or they do not have a minimum wage on their state, in their state statutes. That is entirely possible as well. So there are certain states, I think Louisiana is one, I think Mississippi was one. They don't have any laws on their books, on their state books, regarding what their minimum wage is. So that means that automatically the federal minimum wage is what's going to apply. So it's going to be the federal minimum wage or the state minimum wage, whichever is higher. You'll see as well, and let's look at Washington's a good example. So their state minimum wage is $16.28 an hour in Washington. However, there are certain cities in Washington, here's some localities, that have a higher minimum wage. So not only is the state minimum wage higher than the federal minimum wage, there are cities individually that have higher minimum wages as well. So Seattle, and you can see it depends on the size of the employer. So in Seattle, large employers with 500, which is defined as 501 or more employees, have to pay at least $19.97 per hour as their minimum wage. Small employers get to pay a little bit less, $17.25 an hour, except small employers, let's see, toward, if they don't pay $2.19 an hour toward medical benefits, and the employee does not earn $2.19 an hour in tips, then they have to pay that $19.97 per hour as well. So there are some specifics in different jurisdictions where there may be a minimum wage that is higher. Let's take a look at California real quick, because I know there are a lot of different cities there as well that have.
And that's based on where the job is located, not where the employee is.
Yes, not where the employee lives, but where the job is located. So you can see here, California, there's a lot of different minimum wages. Now, all the local jurisdictions are higher than the state minimum wage. Let's see. So we got San Francisco is at $18.07 as a minimum wage. West Hollywood, $19.08. And California as well has passed certain laws that, like, even for particular occupations, I know they passed a law fairly recently, like within the last year or two, where in Los Angeles anyway, individuals within the hospitality industry, I think, have to be paid at least $20 an hour. So those would be people at hotels and restaurants and things like that. They have to be paid a higher minimum wage. So whatever minimum wage in the location where they're working, where the work is done, whichever minimum wage is higher is what the employee has to be paid. And you can see, now you can start to see the complexities of being a payroll accountant, especially if you're in an area like this, even if it's a local business. If you live like if you have a business that's in California and in different jurisdictions, now not only are you dealing with the different taxes in those different jurisdictions, you've also got to be up on all the different minimum wage requirements and what the wages that have to be paid for all of these employees. Now for Iowa, we're pretty simple. We are at $7.25 an hour. Iowa, I think on Iowa's minimum wage statute just says that it's the same as the federal minimum wage. So we do have a minimum wage statute, but it equates to the federal minimum wage. We do not have any localities with different minimum wages. It was a few years ago, Iowa City tried to pass an ordinance, a city ordinance, I think it was. It may have been a county ordinance that increased the minimum wage in that area. But the state legislature responded by passing a law saying that localities cannot set minimum wages that are different from the state minimum wage. So they're not allowed to do so, which sounds a little harsh. However, when you think about the reasoning behind it, they don't want cities competing with each other. They don't want counties competing with each other, and that in the environment that would create. And so that's why they set the general minimum wage. Yeah, Regina.
So you know how we mentioned that you don't really tax on your tips? So in California, where the minimum wage is like $20 an hour for hospitality, does that rule still apply to them?
So we're going to talk about tips.
Oh, okay.
So tips are kind of a whole different area, and you'll find a lot of students, that's one of the more complex issues within this chapter is the whole concept of tips, because tips get some special treatment, and it's different depending upon what state you're in as well, because those states will have different rules with regard to tipped employees. But we'll talk about that. Yeah. So this is just kind of a good example, gives you an idea of the different states and localities and what their minimum wage is. You'll see over here this check mark, rate adjusted yearly. That just means it's automatically adjusted, like for inflation. I don't know what inflation numbers they use, probably prime plus whatever percentage. But if there's no check mark there, it means that in order to change it, the state legislature has to pass a new law or they have to have a referendum or something along those lines in order to change it. But these states with the check mark, it's automatically adjusted for inflation. So, and like I said, I think pretty close to half, if not more than half of the states have minimum wage laws set to higher than the federal minimum wage. All right. So we talked about those instances where they can, a couple of instances where they can pay less than a minimum wage. Those instances where they have to pay more than the minimum wage. Oh, these are the ones. So these states, Alabama, Louisiana, Mississippi, South Carolina, Tennessee, they don't have any minimum wage set on their state laws. So that means it automatically defaults to the federal minimum wage. It can't go below that federal minimum wage. And we already talked about the fact that there are lots of multiple different rates based on region, employer size, urban versus non-urban counties. It can get quite complex what the minimum wage is. I don't really want to talk too much about this living wage thing. Living wage isn't really, it's like not really a law. It's more of a philosophy of having a wage that would cover employees' basic needs. So it's more from the employee perspective of what does the employee need, rather than with the minimum wage is set from the employer's perspective. What are the employer's requirements? So this concept of living wage is, there are certain cities, localities, and you saw some examples of those where they have those minimum wage amounts are kind of based on this concept of a living wage. What does it cost for an individual to live in that area? So it's more based on cost of living and such, not so much about about what the employer wants to pay or what the market rate is for that. Okay, so again, so what we're talking about here on an hourly basis applies only to what we classify as non-exempt employees. We're going to go through the difference between non-exempt and exempt employees. We're talking about the FLSA. So if they're non-exempt from the FLSA, that means that they are subject to the provisions of, and by they, I mean the employer, is subject to the provisions of the overtime and minimum wage regulations, hourly minimum wage regulations. So for a non-exempt employee, that's who has to be paid the $7.25 an hour. That's who's going to have to be paid overtime for any time over 40 hours a week that is worked. Exempt employees, we're going to get to who exempt employees are and what they have to be paid. Exempt employees are not subject to the $7.25 an hour minimum wage. And they're also not entitled to overtime pay. But the non-exempt employees have to be paid at least the minimum wage. They can be paid in cash equivalent, and they have to be paid for all hours that are worked. We're also going to go through and talk kind of about what is an hour worked, right? We talked a little bit about this. That compensation includes the wages, and wages can be paid in lots of different ways. They can be paid on a salary basis, meaning you're getting paid a certain amount per week, per 2 weeks, per half month, per month, whatever it is, or on an annual basis. They can be paid hourly, or it can be paid what's called a piecemeal rate. Piecemeal is where you're paid for the unit of production. So if you inspect, 1,000 units over the course of the day, you're paid per unit that you inspected. Even if you're paid per unit inspected, you still have to be paid at least $7.25 an hour. The law says you still have to make at least that. So there are some additional calculations for some of those different types of compensation. We talked about commissions, certain bonuses as well. And we're going to get more into the tips. Tips essentially, up to a certain amount per hour, get to be included in that $7.25 an hour. Meaning essentially that the employer pays a certain amount toward the $7.25, but then the customer who's leaving the tip pays a certain amount toward that $7.25. But the employee has to be guaranteed at least $7.25 an hour. And that tip credit does vary per state, and even occupations like those federal contractors that I talked about, they don't have a tip credit. So whatever tips they get are over and above 100% over and above the $17.20 an hour. In addition to cash payments, certain types of non-cash payments can also be included in the calculation of minimum wage, whether minimum wage has been met or not. The reasonable cost of room, board, and other facilities provided by the employer for the employee's benefit. And that's important. This whole for the employee's benefit is important, because if it's for the employer's benefit, then it doesn't get to be included in the calculation of minimum wage. So let's talk a little bit about the difference between whether it's for the employee or the employer's benefit. So think about an employee who works at a restaurant, and they're at the end of their shift. They're going to go home, but they're hungry. And the employer says, well, you can have a meal. We'll pay for it. You don't have to pay for it. And then you can go home afterwards. Your choice, whether you want to do that or not. Well, that meal is for the employee's benefit, right? If they didn't eat it there, they'd go home and eat at, whatever they've got in the fridge. In that case, the employer isn't saying you have to stay here. You have to, you're going to eat what we provide to you. They're saying we're giving you the choice. That's for the employee's benefit. In that case, the value of that meal, the cost of that meal to the employer would be included in the calculation of minimum wage, whether minimum wage has been met or not. So, for example, again, we'll use the 40 hours. I'm going to change these numbers up a little bit here. So 40 hours, we'll say the meals had a cost of $10 each, so 20, and their wage was $270. Now, the wage alone, the cash, would not come out to $7.25 an hour. $270 over 40 hours. I'll show you that would be $6.75 an hour. They wouldn't meet the minimum wage. However, the employer provided them 2 meals that were worth $10 each. The employer can count that toward their wage. So instead of paying them in money, they paid them in meals, as long as it was for the employee's benefit. Okay? If it was for the employer's benefit, then they cannot include that cost in the calculation of minimum wage. In that case, this employee could not be paid $270. They'd have to be paid an additional $20 to get them up to $290, which, by the way, and this will become second nature to you. $290 a week for 40 hours of work is $7.25 an hour. So you'll do enough problems where that becomes kind of second nature that you just know automatically that's, oh yeah, $7.25 an hour, 40 hours, that's $290. So if it's an example of if it's not for the employee's benefit, so let's say, again, you're working at a restaurant, you're working the lunch shift, and you got to work the dinner shift. And there's not a whole lot of time in between, and the employer wants you to just stay there. They want you to stay on premises. Maybe you got half an hour, and so they provide you with a meal in between those 2 shifts. Now that's for the employer's benefit, so that you won't be late to your next shift. You're just going to stay there. It benefits them to have you stay there. In that case, they cannot include those meals toward the minimum wage amount. Okay, so that's kind of the difference between whether it's for the employee's benefit or whether it's for the employer's benefit. Questions so far? Yeah, go ahead.
I don't really have a question about that.
Mm-hmm.
But if like you're doing commission and you get tips and like that counts towards your minimum wage, what if you don't meet that goal?
We're going to talk about that. Yep, the employer is going to have to make up the difference. The employer has to ensure that your wages, everything that can be included as wages, all of it totaled up gets you at least to the $7.25 an hour or whatever the minimum wage is, right? We focus mainly on the federal minimum wage. just because it also applies to Iowa as well. Get that out of the way before I trip. But that when we talk about tips, we're going to go into that as well because that's included in there. Great question. Any other questions? Okay, so lodging and board. So there has to be like 5 requirements. And lodging, I always use the example of like if you're a hotel manager, maybe the hotel wants you to stay there during your, they want you to be on the premises in case you have to fix any problems that come up. So they want somebody there physically. And so they provide you with a hotel room so that you can do that. In that case, they're not going to include the value of that hotel room or the cost to them of that hotel room in this calculation of minimum wage. If, however, it's the end of your shift and it's really late and you don't want to drive home, you got an hour drive and you decide, I just want to stay, and they allow you to stay in a room, they can include that then in the calculation of your minimum wage because it was for your benefit at the end of your shift. So that's kind of an example for the lodging situation. Also, there are a lot of companies, especially I had some clients who would work for like oil companies up in North Dakota, and they have housing arrangements there. Like they bring people in from all over the place to work in these oil fields, and so they have housing arrangements there. So the lodging is provided for the employer's benefit because they need the people to be there. Otherwise they're commuting from all sorts of distances. But it has to meet 5 requirements. So it has to be regularly provided by the employer or similar employer. So it can't be something that's really out of the ordinary. So like if you're working at a CPA firm and it's tax season and you're working 90-hour weeks and your employer provides you a hotel room or something to stay in or something, that's not really ordinary. That doesn't usually happen. But that might be an example of something that's not regularly provided by the employer or similar employers. The employee has to voluntarily accept the lodging as well, so they have to agree to it. Lodging has to be furnished in compliance with federal and local laws. Yeah.
What do similar employers mean?
So if it's common in the industry to do such a thing. So my example of the hotel manager, if that's a common thing that hotels will do, that sort of thing. Yeah. Again, lodging is provided for the benefit of the employee rather than the employer, and the employer has to maintain records of the costs that are incurred in furnishing the lodging. Again, the costs would be whatever it costs the employer. It wouldn't necessarily be what the market rate is for that hotel room or that meal. It's going to be whatever it actually costs the employer in order to provide that. We watched a video about deductions, so I'm not going to go into, I might go into a little bit of detail about the deductions, but so deductions from pay, so these are things like if the employer requires you to have a particular uniform and they charge you for it. So my job at McDonald's, I had to wear a McDonald's uniform. I cannot remember if I had to pay for it or not. And back in my day, they were polyester and they were absolutely hideous. And they smelled like French fries all the time, regardless of how many times you wash them. So if you've got a uniform that is something that you can't ordinarily wear out and about, so like the McDonald's uniform, you wouldn't really want to wear that out and about unless you were maybe dressing up as for Halloween. It has to be primarily, it's illegal if it's primarily for the convenience of the employer, and it's illegal to deduct it from employees' pay if it's primarily for the benefit and convenience of the employer, and, this is an and, not an or, the deduction reduces the employee earnings below the required minimum wage. So they require you to have this uniform and they charge you for it, but then in charging you for it for that week, it brings you below the minimum wage. that would be illegal. They cannot do that. So an example, instead of the meals, let's do this. Let's bring this back up to 290. So 290, and let's say we have a uniform that the employer is requiring that you buy, and it's not just anything that you could wear anywhere. It's got maybe a logo on it or something like that, and they're charging you $20 for it. That brings you to $270 for the week. If you worked 40 hours, that does not meet the minimum wage requirements. So they cannot make that deduction. That would be an illegal deduction because it brought you below the minimum wage. Now, if it's something like, so Starbucks recently had a policy change where they were requiring, I guess they weren't requiring specific uniforms before, but now they're requiring their employees to wear like a black shirt and either khaki pants or jeans. So, but these are clothes that the employee pays for, and they're clothes that can be worn anywhere. They don't say Starbucks on them. They're not saying you have to buy this particular brand. It's up to the employee. That buy a 5-pack of Hanes t-shirts for $20, that sort of thing. In that case, it doesn't reduce the deduction because Starbucks isn't taking it out of their paycheck. They're just telling them, you got to go, this is what your uniform. If you want to work here, this is what your uniform is. Now, I think Starbucks pays way above the minimum wage anyway, so it's not really an issue. All of this is concerning whether or not those deductions will take an employee down below the minimum wage on a per hour basis. Yeah?
I have a question. So obviously, like McDonald's, they would buy those uniforms and then they take them off. Are they able to use that purchase as a deduction even though the employee is paying for it eventually?
So as a deduction, you mean like for tax purposes? So does McDonald's, it would depend on who is ultimately paying for it.
So I worked for a salon. Our deduction was haircuts they had cost $2 between water usage, shampoo, colors for the color, whatever.
Yeah.
So they took it out. But then we never were able to deduct that on our taxes.
Right, because they don't allow that deduction anymore.
But then they would, even though it was being taken out of our.
Okay, yeah, so technically speaking, they shouldn't do that, but what they would probably do, they would be allowed to deduct the cost of the materials that were used, that the employees then used up, like the hair color. Well, what they did was I have to think that one through.
I questioned it, and they said, well, there's no way because you weren't the one that purchased it.
Right, and they're going to purchase, and it's such a small amount. That's really hard administratively, I think, to track, especially when you're using portions of something. But they would be deducting like 100% of the shampoo that they purchase in their inventory when they purchase that inventory, and 100% like the coloring, the hair coloring, all of that stuff. They would be deducting all of that. They'd be reducing your wages by that amount. Like they're not paying that in wages. I'd have to think that through as to whether or not whether or not they did that properly as far as from income tax purposes or not.
I mean, like, I worked there for 10 years.
Mm-hmm. Yeah.
When you bring in $3,000 worth of services.
Right. Right. It seems like, to me, it seems like that minimal amount that they're charging you is, why bother with that? Just make that an employee benefit that you get to use these. But that's just from a business perspective and an employee relations, yeah.
For the Starbucks, since it's not like your uniform that we, give out, if I was a Starbucks employee, could I claim that on my taxes?
So you can't anymore because they have eliminated that deduction. There was a time when you would have been able to, if you itemized your deductions, and if it was over 2% of your adjusted gross income, then you could deduct that. Yeah, there were a lot of rules that went along with it and a lot of limitations, even when it was in existence. But in 2017, they eliminated that miscellaneous itemized deduction. But that's where you would have been able to deduct it had you been eligible, but not anymore. Yeah. If you're an employee, right? If you're an independent contractor, you can deduct those types of things. But obviously, working for Starbucks, you're not an independent contractor. You're an employee. Okay, some other examples: illegal deductions. So things for tools, like if your employer, if you're, I guess. If you purchase, no, not you purchase, but they purchase tools and they can't deduct then that cost because it's benefiting them, right? You have to have these tools in order to work. Damages to property, they can't deduct for that, as well as cash register shortages. Now, if it turns out that it's a regular thing with the cash register shortages, they could certainly fire you, right? Or even the first time they could fire you, they just can't deduct it from somebody's pay. I remember I had a client who ran a plumbing business. And his in-house bookkeeper, they had some conflicts with the in-house bookkeeper, and the in-house bookkeeper quit. But before she quit, she changed all the passwords on everything so they could not get into their accounting system. And so they had to pay somebody to get into the accounting system in order to retrieve all that, and they wondered if they could then charge her for what she did. And I'm like, no, you can't. I'm sorry. You still have to pay her. You still have to pay her that last paycheck, and you've got to pay her everything that you owe her. I know lessons learned. That's that sort of thing. So that's kind of along the lines of the cash register shortages there. So here's just an example of a deduction that would not be in compliance, would not meet the minimum wage requirements. So here we've got somebody who makes $8 an hour and they work 30 hours. So gross pay $240 for the week. Then they had a uniform charge of $30. That brought them down to $210. Take that 210 divided by 30 hours is going to be $7 an hour that they're making. That does not meet the requirements of $7.25 an hour. So what they would have to do is then pay the employee an additional $7.50 to make sure that they are in compliance with the minimum wage requirements. All right.
I have a question.
Yep.
So it said at the top the hourly rate was $8 an hour?
Yeah.
So
In this
so it doesn't have to go by that $8 an hour rule as long as it follows the federal rule?
Yes.
Okay.
Legally speaking, yes. Yep. Absolutely. Now, they could have a company policy where they don't, and in that case, it's just we don't charge for the uniform, right? But from a legal standpoint, from the FLSA standpoint, they just have to meet that minimum wage, that hourly minimum wage. Yeah.
Thinking that I see it maybe being conflicting, like let's say you're in California, you're being paid $20 an hour. Can an employer get around that so they can only have to pay them the federal? You know what I mean? Not
in California. So in California, they'd have to meet, that would be the minimum amount, would be the $20 an hour, whatever that local minimum wage is.
Okay. So
Yep.
only applies to...
The federal applies, well, it applies across the board at the federal level, but it's only going to apply to those states and jurisdictions where they don't have a higher minimum wage.
Okay.
Right, exactly. Which nowadays is probably covers a minority of the population, because we look at states the big states like California and New York, those that have a lot higher population, they have higher minimum wage. From a population standpoint, probably a lot more people in the country are covered by a higher minimum wage than the federal minimum wage, right? But in Iowa, the 3 million of us in Iowa are covered by the federal minimum wage. Now, economic conditions being as what they are and what they have been for the last probably decade or so, those economic pressures have made it so that very few people are really making the minimum wage amount because employers can't hire people at that rate. So they automatically raise those rates. All right, let's see. We're going to move on to tipped.